Hello, investors. Welcome to EBS Invest. I hope everyone is having a wonderful day. Let's jump into the video. So today we are talking about IBM, or International Business Machines. Some of you may know it as Big Blue, potentially. IBM has been around since 1911 and today focuses on software, hybrid cloud and public cloud, consulting services, and AI. IBM's cloud is one of IBM's biggest bets on the future. Did I also mention they dabble in quantum computing? IBM is responsible for many creations such as the personal computer, magnetic strip, and much more. They have also won 5 Nobel Peace Prizes. And they've been paying a dividend since 1916 and have been increasing their dividend for the past 30 years more. So IBM is considered a dividend aristocrat. So we're looking at IBM here, and IBM currently is sitting at $140.83. It offers a 4.6% yield, which is pretty attractive for a lot of people. And IBM also has a forward PE of 14, but a PE ratio of 23. So it is a little bit overvalued in my opinion. We like to see those lower PEs, but I think a lot of people are factoring in IBM has a lot of growth potential for the future here. So IBM recently just got a new CEO, April 6, 2020. His name is Arvind Krishna. And Arvind, I just want to give a little context here. So Arvind immediately sold off Kyndryl. It was a heavy infrastructure side of the company. It wasn't very profitable, and he's big on cloud and cloud computing, and he really wants IBM to succeed in the cloud computing space. And so they sold off Kyndryl, and you can buy the stock if you want. It's just KD on the stock market. Um, but if you go to the financials, you can see that the company has a lot of debt, and is one of the reasons they got rid of it. It's just not very good. But if you think in a few years they can turn their infrastructure side around, then this stock is definitely potentially worth it. But we're not talking about Kyndryl, we're talking about IBM. So Arvind Krishna, a lot of people like him and they think he's going to turn the company around, and I tend to agree. But let's break down IBM's revenue. So you can see they're big branches. So you have consulting, which is like IBM helps out, another business, and you understand consulting. Then there's financing, very small, infrastructure, which is similar to Kyndryl, except for Kyndryl is more of like mainframes. Actually, sorry, this is mainframes. This was just like IT service and other infrastructure providers, and then software. So software includes Watson, but mostly includes cloud. And so you can see 40% of their revenue is coming from cloud as of recent. So if we look at IBM stock price, so max wise it's up 843%, but in the past 5 years it's traded sideways. It's down 4% in the past five. And really, ever since like 2012, it's just been tumbling ever since. But they do give IBM a grade of a B on the score, and IBM also has a market cap of 126 billion. Forgot to mention that. It's a big company, guys. I mean, it's a very big company. And IBM also owns Red Hat. This is their big cloud. They purchased Red Hat for like 30 billion. But Red Hat is starting to be profitable again, which is the reason why some of IBM's software percentages are up quite a bit here. And so IBM, so if we look at the financials here, so IBM has seen, they're starting to see their revenue increase year over year. A lot of this is due to them selling off Kyndryl. It was $20 billion revenue hit to Kyndryl. So they went from about 70 billion to about, you can see 57 billion. So give or take 15 to 20 billion dollar revenue hit. So they said the numbers are going to be pretty messed up, but you can see operating income's up, net cash is up. They have a nice cash reserve, as you guys can see. And they've recently they only just missed EPS, but with the new CEO, they've started to, at least hit the quarter fully or just miss on one part. And so you can see IBM's year-over-year growth for cloud. I believe it was up 17%. I forget. Let's see. Sorry, guys. I guess I had the wrong one. That's not the right year. All right. Well, of course, Google isn't really helping. But so I would like to, after talking about that, let's just look into. So I told you guys that the stock traded sideways. Um, you can very well see that on the stock chart there, that the stock did trade pretty sideways. Ever since the mid, it's gone bing, 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 bing. Pretty self-evident. But I find this particularly interesting. So you can see we're in a bear flag, which means it's going down continuously, so it hits the top resistance and then comes down. It's broken out a few times in the bear flag, but this was COVID, and this might have been something else that I'm unaware of. But I find this particularly interesting that in the bear flag, IBM has broken out here, here, and here, and it's starting to consolidate on the 140 range right here. And so maybe that's just potentially because people think the stock market is going to plummet, if the recession on the rise, to put money into IBM, get a dividend for holding. But personally, I think it's because you can see, I think it's mostly just because they're starting to report the good earnings, like we said before. Revenue is finally up, year over year. We're starting to see the single digit mid growth. And so IBM is just starting to peak that. And so what I personally think will happen is IBM is going to bounce like this. We might get something like that, but it's going to trade sideways for the next 2 years or year. But I think by 2024, 2025, IBM will go up until this range, into the 160, 170. And so I think IBM with enough consolidation, and even if it drops here, I think it'll still, it won't be pretty, but I think we can get here for sure. And so now on to our intrinsic value calculator. So IBM is currently trading at $140. Earning per share last quarter was $9.69. This is accumulated. Expected growth rate of 4. So they said a high single digit growth rate. That could be 9, 6%. They don't really specify. I went conservative with a 4. Even with a 6, which I think is more reasonable, I think is just too high. So I think at 4, currently the bond yield is 4.2, and so we get $166.07, which means that IBM is currently sitting at a 16% discount. And so I think, like I said before, if IBM can consolidate here and eventually start, if they keep those good earnings boosting up and people start to believe in the company, I think IBM is a nice $170 stock. Mark my words, by 2030, IBM will probably be sitting at about $200. But because clouds just keep going to grow, they're a growth company now. I mean, their cloud revenue is just up. So that was IBM. But let's go into the forecast here. So this is on the stock analysis side. You can see that they forecast an average for 1 year of $146. And I tend to agree with that. I think IBM will kind of hang in the 130, 140 range. But I think eventually we will hit the 170, 174 range. I think the consensus of a buy is accurate, although I wouldn't be targeting this price. I mean, you could if you wanted to, but if we throw in a 3% growth or a 3.5, you're not really getting that 10.5%. So I think in order to be conservative, I would probably put your buy price in at about 100, and anything below 130, I would say, is a really nice pickup. Thanks for watching, guys. This is my analysis on IBM. I personally think IBM is a buy at any price below 130. Do your own research, but I think IBM's cloud computing is growing, is growing. Their software and AI sales are up, and I think IBM is finally starting to be profitable again, and we can finally see that with their new CEO and company leadership. Thanks, guys, for watching. Have a good rest of your day. Thanks. Bye.